This video is about Tesla and how its stock price has been going crazy recently. And I'm going to analyze Tesla compared to other car manufacturers and talk about how it's priced and if it's worth it and if you should buy it. And also, what are some of the factors of why it's been going crazy like this in the last few days. So let's start off first at some of the reasons of why it's gone up in the last few days. And if you look at Zero Hedge, you'll see a few reasons. One of the reasons is that this guy came out and said this crazy number on Barron's that Tesla stock could go to $7,000 by 2024 or so. Another reason is that Panasonic said that the business turned profitable in a quarter ending December 31st. Okay, so Tesla still loses money. Okay, they lost about $800 million last year or so. So they're still losing money, but this is some positive news. And this type of positive news kind of maybe spooked some of the short sellers, especially since Tesla has already been going up recently. So this might have been the last straw they couldn't take anymore. So some of these hedge funds like Greenlight, which was it was down 7.6% at the start of the year, and they're a Tesla bear, so they might have been short and they might have been covering. So a lot of people out there were short Tesla, and if you see the short interest here in mid 2019 was about 45 million shares. Now it's down to 25 million. So somebody or a lot of people who have been short have been buying back these shares. And so this is like a giant short squeeze, and that's probably the biggest reason why Tesla is up so much. Now, let's take a look at the Tesla stock compared to its peers in the automotive industry. Let's look at a chart of Volkswagen. Okay. Volkswagen price is what, $18 or so, but look back in 2008, Volkswagen also went through a giant short squeeze. Okay, I'll get back to that later on, but suffice it to say, look where it was, $109. Look where it is now. So short squeezes are usually temporary. And the people that buy into it with the euphoria of, unlimited riches in their mind usually never works out well. Look how quickly this one fell apart. So let's take a look at some numbers about Tesla and some other companies here. First, let's look at the revenue, how much their sales actually are. Okay. Toyota Motor Company has $280 billion in sales, and Volkswagen's very similar at 279, Ford 158 billion, Honda 143 billion, Tesla 24 billion. That's their revenue. Okay, and just to give you an idea, Volkswagen produces about 10.8 million cars. Tesla produces about 500,000 cars a year. Next, let's look at the PE ratio, meaning how much you're willing to spend for every dollar of earnings. Okay, the S&P 500 is usually around 20, 25, somewhere around that range, between historically anywhere from 16 to 20, 25. Okay, car manufacturers are usually even lower because just it's a low margin business. And so look at Volkswagen has a PE of 6. Okay, Honda PE of 9, Toyota PE of 11, and Ford a PE of 20. How come Tesla's not on here? Because they don't have any PE. Okay, because the E in the PE is negative. They don't have any earnings. They're losing money, so they don't even have a PE ratio. Next is the net income. Okay, and this goes to what I just said about the PE. Okay, Toyota Motor Company, 17 billion in net income in the trailing 12 months. Okay, 17.5, Volkswagen 15.5 billion, Honda 4.7 billion, and Ford 1.6 billion. Tesla's on this one, but it's below zero at minus 827 million for the trailing 12 months. Next is the market cap. Okay, so Tesla's losing money. Tesla makes, I don't know, 20 times less cars than Volkswagen, yet Tesla's market cap is $161 billion. And the only one that's more than that is Toyota, which is $199 billion. Volkswagen is $93 billion, and Honda's 43, and Ford is 32. So Tesla is worth about these three companies combined. So that kind of gives you an idea of how out of whack the price is on this stock. Now, all that usually doesn't do anything for people who have the fever to buy the stock. Okay, they just buy the story. Most people buy stocks on the story, the beautiful story of what's going to happen in the future, and so they want to believe that Tesla is the Apple of electric cars or something along those lines. And so they don't care that it's losing money. They don't care that it doesn't make a lot of cars yet. They just know that it's a beautiful story, and in the future it's going to make money. And the fact that the stock is going up makes people really excited to buy it. Okay, they think it's just going to keep going up $200-300 a day for every day for the next week or month or whatever thing they have in their head that, oh yeah, I'm just going to buy it and I'll get out at a 50% gain or a 30% gain or 100% gain, depending on how greedy they are. Okay, it usually doesn't work out that way. Okay, let's look at some companies that had big run-ups and where they are now. And most of these companies everybody knows of, but they don't know the history of where they were and what happened to them. So look at Intel. Back in 2000, during the internet bubble, Intel's stock price was, $74? So it still hasn't recovered from back in 2000. And the PE of Intel, the high back then, was something like 169. And chips for computers and the internet and everything like that, they were the pickaxes and blue jeans in the gold rush kind of thing. They made the chips that power the computers and the servers, so they're going to do nothing but go up forever. So at this 60 something PE, and even though their net income was $10 billion at the time, they had earnings and everything, but people just bid it up like crazy, thinking that it's going to go on forever. So after the internet bubble crash, their earnings went down, but they recovered, and their earnings are now $40 billion, so 4 times more than back here. So how come the stock isn't 4 times higher? Well, because their PE ratio is back to a market normal PE ratio of 12. It's actually probably lower. It's lower than the S&P in general. So it went from being a high of like 170 to down to 12. So that's about 14, 15 times less. So even though their revenue went up 4 times over 20 years, their stock price still is not at the peak of where it was with this high PE. So don't chase high PE or no PE stocks thinking that the earnings will make up for it later, or the revenue or whatever, because even if the earnings do increase, when the stock goes down to a normal PE, then the price is going to reflect that hugely. Okay, the same thing happened to Cisco. Cisco was supposed to be the first $1 trillion company. back here in 2000 was $80. Now it's $47. And its PE was something like around what, 200 or so, 230. And they had earnings, $2.4 billion here in earnings. And now their earnings are $11 billion. So about four or five times more earnings. How come the stock price isn't 4 or 5 times the $80 high? It's actually less than it was 20 years ago. So this is the type of thing that happens when people get euphoric about a stock and believe the idea and not look at the numbers. So this again was the idea that Cisco was the pickaxe and the blue jean and the shovels in the internet gold rush. They made all the equipment for the networking and everything like that, so people didn't care, they just bought it. And I gotta say that a lot of the people that were buying it at the time were people that a lot of them were younger to investing. Maybe they were just in their 20s and 30s, and so they've never been burned before, and so they just bid it up like crazy because they bought the story and not looked at the actual numbers. And that's probably what's happening with Tesla today, because so many people, one, they never seen a bear market because they've been investing after 2009, so they've only seen the market go up. And two, they're buying into the story that it's going to be the next great company like Apple or something along those lines, and so they're going to buy it at any price, and they're not even looking at earnings or PE or anything like that. And they're gonna be sadly mistaken and sorry that they paid so much, you know, a few years down the line when things normal out to a regular valuation, if Tesla ever does actually get any earnings. So back to the Volkswagen thing, look what happened here back in 2008, even before the financial crisis. There was a short squeeze, and it's a little complicated, but all you need to know is that with this short squeeze, Volkswagen went from something like 200 euros a share to like 1,000 euros a share, and briefly became the world's most valuable company at $370 billion at the time, which was more than the market cap of ExxonMobil. But of course, that short squeeze didn't last, and you see, even, you know, within the year, it collapsed, and now it's back to a regular valuation, $18 a share or whatever it is. So that's a look at what happens when people buy into the hype and just buy into the story and not look at the numbers, and also what happens in a short squeeze when people are forced to buy back the stock because it keeps going higher. So it's a self-fulfilling prophecy. The more they have to buy it back, the higher it goes, and the more they're losing money. And so they have to buy it back quicker and quicker, and they don't care at what price, because they are to the point where the pain is just too great, the losses are just too great, and they have to buy back at any price. So don't be the second loser that buys it at these highs thinking that it's just going to continue forever, because it's not. And when it comes down, it's not going to be pretty. So, and one final lesson on this is, don't be a short seller, because you really have to know what you're doing, and the most you can make is 100%, but the most you can lose is infinite, as you can see here in this Volkswagen short squeeze. So that's my video about Tesla and why I think you should not buy it. And if you are one of these people that just have a small amount of money and think you're gonna double or triple your money quickly by buying Tesla, forget about it. It's not gonna happen. It's gonna end very badly for you. And you know, maybe that's a good thing. If you only have a few $1,000s and think you're gonna triple or quadruple your money, better to lose your money now and learn a lesson with a small amount of money than do it later on in life when you have a lot more money to lose. So if you didn't understand what my point is in this video, it's do not chase Tesla at these levels, to these higher and higher levels on this short squeeze, no matter what the talking heads say, trying to goose the stock, saying it's going to $7,000 and all this other kind of crazy talk. So that's my video on Tesla. If you liked it, give me a thumbs up. Leave me a comment if you think Tesla is overpriced, and and leave me a comment if after this video you still plan on buying Tesla anyway. And if you haven't done so already, please subscribe to my channel. Thank you for watching.